We are here to talk about the release out this morning in which, you codify many of the targets that you shared to a certain extent during your last quarter. So what is different about today in terms of why people should think about these numbers again if they already sort of saw you talking about them a few weeks back?
Yeah, well, let me just extend my welcome. Glad to have you here, David, and glad to share the view of the lab and some of the discussions and things that we're doing there. With respect to the release today, what we did on our third quarter earnings call in October is we had just had a preliminary review with the board, shared some of the perspective of the things the board was looking at as part of our plan. In November, we finalized that plan, and then this release basically puts in a lot more detail behind the initial numbers that we shared in October. And it's a plan, frankly, that we're very, very proud of. If you think back in 2018, we set some fairly aggressive targets for 2025 to double earnings and cash flow. Pandemic got in the way of that and obviously set those plans back. This plan basically achieves doubling the earnings by 2025, back on track, nearly doubles cash flow, and by 2027 basically double earnings and cash flow very soundly. So very proud of the progress that we've made despite the setback of the pandemic.
Yeah, a lot of focus is also going to be on the $15 billion number. Again, a number that we had seen previously, but a bit more detail behind it as well. You're talking about $15 billion on greenhouse gas emission reduction products over the next 6 years. There are those who want to know, what's the return going to look like on that expenditure, and how are you going to go about spending it?
Yeah, so it's a mix, and what we've tried to do here, and I think one of the things the board has brought to this year's plan in the discussion is challenges to take a lead in how Exxon Mobil can help society address this challenge of reducing emissions. That portfolio of $15 billion includes projects that today generate good returns with existing policy. There are other aspects of that portfolio where we are developing projects, seeding projects, large-scale projects, and anticipation of policy, and trying to develop those projects in a way that can inform policymakers to help them think about how best to shape policy.
So what would be an example of that, Darren?
So the Houston hub that we proposed is a great example of that, where we've got 11 companies collaborating to make a significant step change in emissions, 50 million tons per annum by 2030. 100 million tons per annum by 2040, very high concentrations of CO2, and do that at a cost which is cheaper than essentially any other programs or initiatives that the government's currently funding. So that's a great example, but it needs some policy to help support that project.
What's the policy then?
So you need policy, which frankly the infrastructure bill has helped with, to regulate pore space and allow access to pore space. We're going to need infrastructure and pipeline. We need some additional 45Q, some additional incentives for carbon reduction. That's being considered in the Build Back Better legislation. So I think there's, the policymakers are receptive to the ideas and the constructs that we're trying to put together to, table opportunities, make significant reductions in a cost-effective way.
Shepard Smith here. Thanks for watching CNBC on YouTube.